When it comes to my leadership style, right, I personally feel that there are three key elements for me for leadership. One is leading by example. Second is, being empathetic. And third is how do you really, motivate and inspire the team to, achieve the common goals. I would say for me, leading by example comes first, right? Because, unless I display a certain kind of behavior or a certain attitude, I can't expect my team to have that for display that. Yeah. So safety comes first. We understand that we are in a fiduciary responsibility to manage funds, right? This is shareholders' money, so safety comes paramount. Yeah.
Hello and welcome to Financial Architects, crafting the future of Indian business. We are back again picking the brain of a finance leader of an Indian aviation company to try and understand risk assessment and investment strategy. Please join me in welcoming Shveta Kapur, Associate Vice President Treasury, InterGlobe Aviation Limited. Thank you so much, Shveta, for joining us and welcome to the show.
Thank you, Anisha. Thank you to Mint and thank you to Tata Mutual Fund for having me a part of this series. Pleasure is all mine.
Shveta, risk management is central to your role. So how do you approach risk assessment and what is your key to managing risk efficiently?
See, if I take a step back, what exactly is risk, right? Risk is nothing but the probability of an event not going the way you want it to be, right? So aviation as an industry, we all know, is susceptible to a lot of inherent external fluctuations, whether it is fuel prices, whether it's currency, whether it's interest rate. It directly impacts our costs adversely, in the form of ATF prices, lease rentals, etc., right? If I specifically talk about investments, right, so a lot of macros and the current volatile environment poses a lot of risk to us, but we have a very clearly well-defined three-tier structure for investment management, right? So at the top we have our risk management committee, which consists of the board members, which actually monitors and guides us basis the ongoing business volatility and the environment. Then we have our internal investment governance committee, which comprises of our CFO and senior finance folks, which essentially helps us, which guides us and monitors the strategy of the investing that we follow. And then at the bottom we have our investment management committee, which essentially on the ground really decides what to invest, how to invest, where to invest basis the macros. So essentially the idea is, can we really identify the risks that are the potential risks? How do we really anticipate what could impact us and take proactive measures in advance? How diversified is our portfolio? Yeah, have we really created that cushion for the, do we have enough liquidity to manage the bad times? Setting up of limits, is one aspect. Of course, you have various sorts of limits, but monitoring is a very key element of it. So there are actually three key elements, right? So there is diversification of the portfolio, continuous monitoring, and absolutely having that safety net, for your investments. Yeah.
The three key principles you've explained to me, but you have so many years of experience and you would have gone through multiple crises and high pressure investment decisions, the decisions that you have to take.
Yeah.
How do you adapt your leadership style so that you keep your team morale up and you motivate them also when they're feeling down in the dumps because something has happened which they've not planned for?
So when it comes to my leadership style, right, I personally feel that there are three key elements for me for leadership. One is leading by example. Second is, being empathetic. And third is how do you really, motivate the team to motivate and inspire the team to, achieve the common goals, right? I'll just give a few examples. Right? If I want a culture of mutual trust and respect, I have to first inculcate that in my dealings with the team, right? If I want the team has to work cohesively together and support each other in the bad times that you're talking about, right? So I have to ensure that I am empathetic enough to be able to support them in their needs. If I want the team to have high morale all the time, I have to first carry that at work, right? So for me, no matter what the times have been, whether pandemic or otherwise, the idea is that how can you really display that behavior your own self? How can you showcase that, having that constant learning approach is important. Unless we learn constantly, how do you really learn to move ahead and take decisions in this constantly evolving time? So yeah, I think the mutual trust and respect are key elements. So no matter what the times, for me these three elements have pretty much helped me soar through tide through the tough times. Yeah.
So if I take these three elements, how do you stack it? What is most important? Is it empathy? Is it mutual trust? Is it leading by example? What comes first?
I would say for me, leading by example comes first, right? Because unless I display a certain kind of behavior or a certain attitude, I can't expect my team to have that for display that. Yeah.
All right. So you told us the entire structure, but what are the guidelines or principles that drive your decision-making process when you're dealing with high levels of uncertainty, when there's so much happening in the world that you can't predict? Any principles or a framework that you work with?
Right. So, when it comes to investing at work, for us, the overarching framework remains, or the umbrella framework remains, the SLR framework, which is safety, liquidity, and returns, right? I mean, we necessarily don't have a target return in our minds, while of course we try and optimize the returns at any given point of time. But yes, I mean, there's a lot of data-driven decision making that we do, right? So we have internal models that help us, analyze data. We try and learn a lot from historical trends. Basis these internal models, we decide where to invest, which schemes, what are the counterparty exposures that we could take. So yeah, I mean, and beyond this SLR framework, the umbrella framework, of course, there are a lot of other principles that we have to follow, right? There are counterparty limits, there are AMC exposure limits, there are AUM thresholds that you have to follow, so on and so forth, yeah.
But primary, is it safety or is it returns?
Absolutely, it is SLR in that. So safety comes first. We understand that, we are in a fiduciary responsibility to manage funds, right? I mean, this is shareholders' money, so safety comes paramount. Yeah. So yeah.
So how do you balance, the near and immediate need of some emergency or something that has come up versus a long-term vision that you have and the planning that you've done, both professionally and personally? How do you make a balance of the here and now and what I've planned for in the future if the here and now is suddenly changed?
So I'll talk professionally first. So, just in continuation. So, see, strategically, we have our strategic business plans, right? I mean, basis the strategic plan as an organization, then of course you make your annual budgets, right? And then you drill it down to your monthly cash flows. The idea is, basis the actual budgets, I mean, the budgets that you prepare, you closely monitor the actual revenues that come in, the actual inflows and outflows, and how, the overall budget is stacking up against the actuals. You do that monitoring every single month and multiple times in a month actually. And then, basis that, the idea is that you need to have enough cushion and safety, that safety net for your immediate financial needs that may come up. And basis your cash flow projections, essentially, then you plan the duration of your portfolio. How long do you go, how short, long basis, essentially the cash flows. Yeah. That's on the professional side. Personally, it's a bit different, frankly. As a family, of course, I mean, at the start of the year, between me and my husband, we make an annual cash plan for us, basis our anticipated income levels and the expenses that we're planning to have. But one key for us is that, we actually decide in the beginning of the year how much we want to save in a particular year, okay? And basis that is when, we derive how much we can actually spend on the travel that we want to do in a year, or any other major expenses over and above the
cost of tuition, rent and all of that.
So over and above the operating expenses of the house and of course kids' education and all, what exactly we can allocate for travel or any major expenses is basis the savings that we want to achieve. And then similar to what we do at work, at home also every month we try and see whether are we really catching up with the savings target or not. Yeah.
Okay, let's take a hypothetical situation that you just said you plan beginning of the year for your family finances. Say you had an unexpected hospitalization,
Sure.
or say an in a day operation or a day procedure which was not covered by insurance, and you suddenly had to spend X amount of money. Now, this X amount of money perhaps is going to impact your long-term plan for the year. Did something like this ever happen professionally, or do you think that this is really not what you work to prevent this from happening? Has this ever happened that the near-term need has been so severe that you've had to adjust or perhaps withdraw from what you thought you will do in the future?
Absolutely, whether in professional space or in personal space, a lot of times, I wouldn't say a lot of time, but a lot of times they do, there are events that happen which are not anticipated, right? And essentially, whether in professional space or in personal space, the key is, do you really have that safety net, right? I mean, there has to be an amount that has been kept aside for such contingencies. In say short-term funds or liquid funds, which essentially can cater to such needs. So for example, I mean, at work we typically keep say a month's revenue or the cost needs that we have in our liquid funds, essentially. A source of, so that if on month basis what we're planning for whatever business volatility that happens impacts us negatively, we have enough and more cushion to meet our immediate liabilities, right? Same is the case at home, right? I mean, you need to have that emergency fund created for yourself. It could be, I mean, depending upon person to person, your own personal needs. Some people could keep 1 month, some people keep 3 months expenses as
some
their
people
emergency
keep
funds.
6 months.
Yeah, so it depends on what stage of life you are in, what is your background, what is your assessment of risk that could impact you, right? That essentially drives what is the
contingency plan.
The contingency fund. We call it safety net at work, or whatever that extra funds that you want to keep. So yeah.
How do you foster a culture of innovation? And I mean, in the finance department, what do you have to do? Is it ongoing studies? Is it keeping up with what the others are doing? How do you foster a culture of innovation?
So actually, I'm kind of a bit lucky on that, because I have been a part of that organization that is constantly evolving and constantly innovating. We're always setting benchmarks for ourselves, to beat our own benchmarks that we've set in the past. So for me, to be honest, it's been kind of quite easy. The kind of targets that we have as an organization, right? I mean, so much that we want to achieve, unless we constantly innovate and constantly find new ways of doing things in a much more efficient and effective manner in a lesser time, I don't think we'll be able to achieve that. So yeah, I mean, for us, it's pretty much the DNA in the organization, to constantly innovate and do new things. And specifically in today's environment, how do there's an enough and more focus on data-driven decision making, right? How do you really leverage on data to decide and make decisions? Absolutely.
Could you talk a little more about that, the data-driven decisions? Because say 10-15 years ago, people would have Excel sheets and you put in the information and you get your formula and you work on that.
Yeah.
What is it? How is it? What is the data-driven decision now? And what's happening in the industry? How much does that also impact how you innovate?
So, the way we used to operate 10 years back versus the way we operate today is absolutely different. There's a sea change, right? I mean, flashback 10 years back, a team member used to come every single morning, take out cash balances, logging into different bank accounts, online, manually creating what is the inflow, what is the expected outflow during the day, and figure out, do we need to, how much do we have to invest, how do we invest, and all of that. Today, it is all, we have APIs with banks wherein, everything comes automated online. We have a system which essentially throws what is the total inflows that we have in the beginning.
Aggregation is happening automatically.
Sorry? Yeah, so we have APIs with different banks, right? And we have a system that we use, a third-party tool that we use essentially that gives us what are the total collections in the beginning of the day. And of course, on that portal only, people have put in their payment requests, and we really figure out what is the net surplus that we need to invest. And of course, as I spoke about, we have a lot of decision making that we do basis where to invest, how to invest, and basis that we take decision making. So a lot of it is basis the systems that we are currently using. Whether it's largely third party, but yeah,
Right. I also want to understand what has changed when it comes to the industry dynamics. I believe for the aviation industry, post-COVID, there are a lot of positive headwinds, right? Does this change how you approach money management, risk assessment, investment strategy? I'm trying to understand how this, upbeat environment in the industry, basically because of consolidation, how does it impact your day-to-day life?
See, of course, the positive headwind in the aviation sector is very good for all of us. We're very we've never seen an environment like this, and of course, a lot of it has to do with just the way India has been progressing, the macros, the positive fundamentals, right, and the structural change in the behavior of the consumer, and of course, the government, the way government has been supporting in the infra and everything, right. Yes. How does it impact our day-to-day functioning? The overarching principles for investments for us remain the same, right? As I talked about, safety, liquidity, and returns. Irrespective of how the business dynamics are. But yes, of course, having a positive business environment surely gives a lot of positive boost to the cash flows. There's a lot more money for us to manage. There's a bit of predictability that helps us take a bit more longer duration calls for the investments that we do. So yeah, it's we are very hopeful that the way industry is progressing and the way India, the growth story of India is, there's a lot more for aviation. Yeah, currently.
So I want you to jog your memory a little bit. What has been the most challenging decision you have taken in your career, if you could recall, and what did you learn from it?
That's a little tough one actually, but yes, as a manager, right? You take a lot of decisions on day-to-day basis, and a lot of them might not go the way you want them to be. But for me personally, I think the COVID times have been one of the most challenging times, whether professionally or personally. That time, the aviation sector was
totally grounded.
Totally grounded. The airlines were grounded. None of us had actually experienced that ever in the past, right? And frankly, we didn't know how and when things are going to turn, and it was, to be honest, very, very scary time, right? And in that time, that challenging moment, we had to take certain decisions to separate few of our colleagues, and in my team, and unfortunately, I had to decide and then communicate that to one of my team members, in those challenging times, which I think has been one of the toughest things to do as a manager, right? And until that time, frankly, I always saw life in linearity, right? That you always assume that life, you continue putting your efforts, you continue doing your job, and life
you'll
is
see
going
the
to
benefits.
Life is going to be linear upward, right? And COVID really taught me, and those moments really taught me that life is not just in linear. Life should not be seen in linearity, and law of impermanence, if I say, is the supreme law of nature, is what was my key learning and takeaway. Yeah.
Right. And what is your personal investment strategy? You've talked to us about the SLR principle at work. Does it work at home? And what are your preferred investment vehicles?
So when it comes to personal investments, they are a bit different. So personally, we follow a concept of core portfolio and satellite portfolio when we manage our investments. Core portfolio is nothing but that fundamental or the base portfolio that you have, right, that provides you stability and reliability. And the satellite portfolio would be something that really supplements your core portfolio and gives you that additional opportunistic returns and alpha in your overall portfolio. If I could just give an example, right? So core would be for us, our systematic investments that we do over a longer period of time, and say invest in certain high quality stocks which we want to retain for, say, a longer duration, say a decade or even more.
Okay.
And the satellite portfolio would be, say, any investment in a name which would be opportunistic to, have a benefit of, say, a certain industry doing well. Specifically, say last year, basis the interest rate environment, we invested in GSEC personally, right? I mean, just to have that additional MTM gains basis the interest rate cycle. So yeah, I mean, that's pretty much how, of course, we, as I explained, we have a cash flows defined, we have a saving target that we have in mind, that we target to for a particular year, and in those contours basis this core and satellite portfolio philosophy we do. And specifically for vehicles, we the products, we try to keep it quite simple. It's largely pretty much a combination of mutual funds, stocks, and direct bonds, and GSEC, yeah, a combination.
Right. And what is the split between your core portfolio and the satellite portfolio?
So core portfolio will be largely, say almost 75 to 80%.
Okay.
Yeah, and rest, 25 to 20 to 25% would be portfolio, the other portfolio, yeah.
What is one life mantra or the philosophy that guides you?
So a few years back, I learned the concept of daily meds, MEDSS. That's meditation, exercise, diet, sleep, and that special hobby or a special activity that you want to do. This was in one of the through an ISB professor that I learned. So I realized that over the years, if we can, with discipline actually, and with consistency, try and follow and inculcate these in our daily life, if not all 5, but at least say in a combination of 4 and rotate them, it has a very, 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 very different impact. Just the way your personality turns out, just the way that your stress levels, your energy levels, your just the ability to have that to tide over the, or deal with the daily monotony that life brings in at times. So I think this is one thing that is working really well for me. Yeah, so I try and inculcate at least 4 on a sustainable basis.
That's amazing. So how do you ensure, say, financial transparency or accountability within the family? Say I've started the year, I've planned, I'm going to save this much, and here is where I'm going to invest whatever I save, and suddenly you went to the store and you really love the Gucci bag and you bought the bag. Then how do you get the transparency and the accountability?
See, we are a very small family of 4, and our kids are quite younger. So for us, it's pretty much between me and my husband. That we have to have this. But it's I think just the nature of our work profiles. My husband is also in a similar profile. So for us, that the monthly monitoring that we do really helps us maintain. So for us, we have this common pool. It's, whatever I earn, whatever he earns is a part of the common pool of the family, and basis whatever planning that we've done in the beginning of the year and the targets that we've set. It's kind of, then you just have to monitor that, and it's...
So impulsive buying, what happens then?
You have your thresholds of impulsive buying as well, in terms of, what is the range that you can get into, and we pretty much stick to that. I mean, it's kind of quite boring when it comes to all this, yeah.
All right.
Yeah.
What is the advice that you'd like to give to young financial leaders and team managers who are working their way up the corporate ladder? What would you advise them?
I think anyone who's younger and wanting to get into, irrespective of the field or the industry that they're in, 3 qualities of being disciplined, being committed and consistent, I think, in my personal opinion, could take you a long, long way, no matter what you want to do, whether professionally or personally. Then, of course, second, I would say what Mr. Charlie Munger used to say, right? I mean, that be a lifelong learner. I mean, learn, and learn more. And lastly, a lot of success in life and in business comes from knowing that what you would want to avoid, like you want to avoid that bad company, you want to avoid that bad marriage, you want to avoid that bad investment, you want to avoid that uh, uh, bad habit, right? So I would personally say know what to avoid as well. Yeah.
So how do you arrive at that's the avoid thing? Because you're suddenly flush with a lot of emotions and the hormones that come in with a good feeling, but then you rely on your gut that says, hey, maybe this is a red flag. How do you know what is wrong? And personally, professionally, I mean, how do you know that this isn't right? Is it your gut feeling? How do you get to the this is a bad thing, avoid it?
I would say, I mean, at the core of our heart, all of us know, right? I mean, all of us know that we shouldn't be having that big pie at the end of the at the end of the meal, right? But yes, at times there are times when we do give in to the temptation. I also give in, right? But can we really, on a sustainable basis,
keep doing it,
keep avoiding that thing? Is something that I feel makes a lot of difference, right? I mean, at the end of the day, whether at work or otherwise, you would know internally, your heart will give you that signal that, hey, this is not sounding right, or this is not feeling right, right? And I think I pretty much go with that instinct, yeah.
Right. Shveta, you said that, Charlie Munger said, be a lifelong learner.
Yeah.
In the world we live in, things change so much.
Yeah.
So if I am a young aspiring finance leader, how much, when it comes to this learning, is this a bookish learning or is it everyday learning? How do I keep up to speed with what is happening around? And is that important in this function?
Oh, absolutely. I mean, personally, if you ask me, this is again one of the, I think, the biggest challenges that I feel, face in personally, to be honest, right? I mean, how do you really keep up with the changing environment? There is so much happening. How do you really adapt? How do you really make decisions fast enough that help you stay ahead the curve? But I think, do we have a choice not to? The answer is no, right? Whether at work or otherwise. So, I mean, as I said, I'm lucky to be a part of that organization that really actually inculcates that culture, right? I mean, some of us just completed a specially curated program by Harvard School, which has been designed specifically for, certain, for the leadership centered around people leadership, customer centricity and data-driven mindset. So, some of us just completed are in the process of, doing that. So, something like that we try and tell the team as well all the time, right? You have to constantly keep on learning and staying ahead of the curve. There's no other option in today's world.
All right. Yeah. Thank you so much, Shveta, for speaking with us. It's so good to hear from you and to understand how you navigate this complicated world of financial planning and decision making. Thank you.
Thank you. Pleasure is all mine. Thank you so much.